So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and I'm joined today by Ed Osborne. Ed is the VP of Investments at Spartan Investment Group. And if you've been listening, you know that we've had a few of the Spartans on, and we always get a lot of value from them. So, Ed, welcome to the show.
Thank you very much. Glad to be here.
Absolutely. Love to have you. We had a great offline conversation. You guys obviously are on an absolute roll right now, which I love to see. Very inspiring, but kind of take us back to the beginning. You know, what were you doing before this and what led you here?
Yeah, absolutely. Most of my career has been in construction development in one manner or another. Previously, I was with a building manufacturer and ran their business development and corporate accounts group. So if you've ever been in a Costco, every Costco in the world came out of my group. So
Oh, wow.
a lot of big multinational development, did a lot of Coke work and Coca-Cola work in Indonesia, China.
Thank you for clarifying that.
Yeah, you bet.
Not in Colombia.
Yeah, exactly. So I've done a lot of multi-site development work kind of worldwide. And then just kind of started talking to Scott and Ryan, and their culture and everything that is Spartan really drew me to come over here and work in the investment group.
Awesome. I love it. Yeah, they have a very incredible culture over there, which not hard to pick up on pretty quickly. Everyone's on board with the mission, which I love because you guys are, like I said, really cruising through. So your VP of Investments, talk to us about, what that entails and your role over there.
Yeah, absolutely. So as VP of Investments, I kind of focus on new investors, getting them understanding what we're doing, what we're offering, and then working with them through the process of becoming investors. So that's, out doing a lot of coming up, doing a lot of speaking engagements, doing a lot of, stuff like we're doing today to meet new investors, educate them on who Spartan is as much as what we do, who Spartan is, as you talked about our values and stuff like that. I think a lot of people want to align themselves with a company like Spartan. And then, we can talk about the metrics and all the stuff their investments are going to get into. But really my job is to ingrain them into the Spartan culture and help them through the investment process. And then, move on to the next group.
I love it. That's awesome. It certainly is very much about who you're investing with, which I've noticed, right? Because certainly, at least right now in the market, and we're starting to see a shift, not really in commercial real estate. By shift, I mean the stock market's absolutely plummeting, but yes, interest rates are on the rise, which is affecting us. So I think we'll see some differences there. But ultimately, what I'm getting at is that a lot of the returns are similar operator to operator. And so it's very important that we, establish, like you said, values, and investors, I think, and you can speak to this, probably invest based on that more than the returns.
Yeah, and one of the things that really drew me to Spartan is if you talk to some of our previous investors, we've really tried to create a family type environment that, you are, as an investor, part of the Spartan family, part of the Spartan team. We spend a lot of time and effort in, every time you invest in a project, we send you a challenge coin for that project. One of our founders, Scott, our CEO, is a military guy. So the challenge coin is very much in his line of work. We send birthday gifts and a card, and then yearly send out some swag and all that kind of stuff. So it's really to get you involved with Spartan. It's not just an investment; it's a relationship, and I think we go the extra mile trying to establish that relationship.
Absolutely. I couldn't agree more. And I mean, this is a relationship game, right? It's really all about who you know and nurturing those relationships. And I know you guys are huge on, obviously new investors are great, but it's so important to nurture those and to have repeat investors and take care of those that have already invested, in the group. So what are some, I guess, a two-part question. What are probably like the top 2 ways that investors find you guys, maybe top 3 ways, and then, kind of your approach to nurturing new investors and keeping them?
Yeah, funny. I was just doing some work on this yesterday. We do all the stuff you would normally do, the social media and the people coming in through the website and webinars, and, obviously a lot of in-person type stuff as much as we can. But the number one way people get to us is referrals. You've got your buddy invested and he tells you about it. That's almost 70% of how we spend money to get leads in the door. But it's honestly to what we just talked about, nurturing those people that we have, because if you're doing well and with us, you're going to tell somebody else that you're doing well with us. And so it's kind of that telephone game. You tell somebody, you tell somebody, you tell somebody, and that's the bulk of how we get 90% of our investors are invested in multiple projects or properties. And then the normal stuff, the social media, and we have a decent sized investor relations team that does a lot of outreach and just burning the phones up, trying to find the next great Spartan investor.
Absolutely. I love it. That's awesome. So along those lines, what are you finding is investor sentiment currently as you talk to new investors? Obviously referral, they at least are aware of, what you guys are doing. Are you finding a lot of people had no idea what that self-storage was, what it is and what it can be in terms of an investment, or are people familiar with it? Kind of touch on some of those things.
Yeah, absolutely. I'd say we probably have 2, especially the new incoming investors. We've probably got 2 personas, so we say. One is a pretty savvy investor and has an understanding of syndications, and they're probably in multifamily and maybe some office or whatever the case is. The other side of it is people trying to get out of the market as quickly as possible, that really don't have an understanding of this space. And I tell you the honest truth, I didn't have an understanding of this space not all that long ago, and I'm kicking myself that I spent so much time buying stocks and bonds when I could have been buying other things, hard tangible assets. So really my job is to the savvy investor. I mean, I can show them what our cash flow is and what our equity multipliers, all that kind of fun stuff, and they understand it. But the other side of it is the people that don't understand it know there's a better place to put their money, but can't really grasp it. So it's the education part of it. And that's something that we do here at Spartan through, monthly meetups in our office, and just have an education topic and have them come in, sit down and learn about the yield curve, or, whatever we're discussing that first Friday of every month. First Friday every month, Spartan office, Seattle.
Shameless plug.
Shameless plug. Not that shameless, but getting people to understand, just a piece of it, and then, put those pieces together. And that ultimately is what we're trying to get, because there's a lot of places you can put your money, but understanding why you're putting it there or why it should be there, I think is awfully important.
Absolutely. Yeah, I couldn't agree more. That education piece is so important, because, of course, every once in a while, an investor will come through, hey, I've got $100,000, I'm putting it with you. I know you guys do well, right? And like, the education portion isn't as important. And those are fun, the old lay down. But so you have the sophisticated investor, which, is obviously one conversation, probably focus a little bit more on, how you're reaching your returns and your strategy. And then you, like you mentioned, the other side, which is a little bit more on education. Do you guys have like an average time frame that the other side, the education piece, kind of sits before they invest, or is it kind of vary?
Yeah, it varies. It depends on, like right now, with the markets just doing what they're doing, it's probably a little accelerated if they have access to, liquid cash. But a lot of times you're having to divest and get that capital redistributed. So yeah, it really varies, but I would say it's definitely uptick to a little bit quicker here in the in the last few months anyway. But normally, and quite honestly, I mean, we will take your money as quickly as you want to give it to you, but I want you to be as comfortable as you can possibly be with where it's going. So I mean, we're not hard sell. We have a value that if we can align that with a need, then that's fantastic.
Absolutely. I love that. That's really great insight, because again, going back, that's how that person's going to become a repeat investor, right? When they feel like they're taken care of. And despite the fact that they just want to invest, still treating them like you said, like family. So I think you kind of touched on it, but is there any more to investor sentiment currently with the way that, the stock market and things are going?
Yeah, I've watched my retirement go down the tubes here in the last little bit, and I'm sure everybody I talk to on a daily basis. But what we are offering, and what the syndication network is offering is a piece of something. You own an equity stake, and your share is worth 0.1% of a property, so it's tangible. And I think people are looking for something tangible to hold on to right now, because the stock market is not tangible. It's it's whims, and it's fears, and it's all the other things that aren't generally going to affect real estate.
Yeah, absolutely. And I what I'm noticing, and of course, when you're in this, your network becomes a lot of these investors and people who are already familiar with it and everything. But I'm really starting to see, I think, more than in the past, a lot of people really just being done with the stock market. With, I mean, crypto's gotten crushed now too. And before, crypto was this thing where it's like, oh no, this is totally separate, it's decentralized. But now all of a sudden it tracks a lot like the stock market. And it's like, well, how decentralized is it really?
Yeah.
And so you're seeing a lot of people like really trying to figure out what else is out there. Turns out, real estate's been here for a long time and has truly created that wealth. I'm sure, as you guys are seeing. So now you guys have the fund.
Mm-hmm.
What is it like in terms of that education and helping investors understand how that operates, and why you guys have taken that approach?
Yeah. So as previously we had always raised for every individual project. Last year, I think we bought 44 individual properties. Two of those were in portfolio. I think a 19 property portfolio, and then maybe a 9. But still, that's a lot of raising individually, and it's hair on fire, and it's you got to get it done because you got to close on a certain date. But as I talked about, most of our investors, 90% are in more than one deal. So, we've got investors that are in 10 or 11, 12 deals that are getting 10 or 11, 12 K1s every year. That also means we have to do 10, 11, 12 K1s times however many. So from a back office standpoint, the fund for us made a ton of sense, because that'll be 1 K1 per investor. For our investors, we think it makes a lot of sense, because if you are going to invest in multiple projects or multiple properties, that is exactly what the fund is. So what the fund does is it probably takes out the low a little bit, lends to maybe a little higher upside. And we would also get a lot of questions, should I invest in this property or this property? And, generally speaking, we underwrite them the same. We're trying to buy the same property over and over again. It's a value add that we can come in, implement our business plan. So we kind of just decided that pick the jockey, not the horse, and let the due diligence that we do. And, we talk about our 700-point due diligence checklist, and we fly around and we mystery shop and all that kind of stuff, that you as a retail investor can't do that, and certainly can't do that on the 1,400 deals that we looked at last year to buy the 44 that we bought. So we know what we're doing. We have a pretty good track record. Just jump in with us and enjoy the ride, and truly be a passive investor on, we're trying to buy between 60 and 80 properties this year with the fund. And we've got a track record. Just let us do our job and you do yours, which is cash and checks, hopefully, right?
Absolutely. And is it a monthly or quarterly distribution?
Monthly.
Oh, wow. Even nice.
Yeah.
Starting to see more monthly distributions start to come about. Is that, I assume, due to investors liking that more, or?
I think we kind of looked at it. We are Scott, Ryan, Ben, everybody that's senior management, executive at Spartan are investors in other things, and they just looked at what they liked. And I like a monthly as opposed to quarterly. It keeps you in tune to what you're invested in, I think. Along with all of our, we have monthly communications and quarterly communications and all that kind of stuff, but just, checking your bank account once a month, I think it really keeps you in tune to what you're doing, and people seem to like it.
I mean, I like when money comes into my bank account every month, for sure. So I can definitely understand that, for sure. So the fund is a value add fund, correct? So this is going to be all acquiring already in place properties. Will you guys continue to develop as well?
Not with this fund, but yeah,
Right.
we with a different vehicle. We are just finished up our Black Diamond property last year. That's getting leased up right now. That was an out of ground development up here in Washington. We are just, I think, about 2 weeks away from getting our temporary CO on our Sandy, Oregon out of ground development, greenfield development there on building 1. There's 3 buildings. So we're going to get temporary CO on first building here in about 2 weeks. So yeah, no, I mean, we have our own construction company, Spartan Construction Management, that allows us to do that. But being a value added fund, it's just not the out of, greenfield development and value add are 2 different investors with 2 different timelines. So we will open a different vehicle if we're going to go out of ground.
Makes perfect sense. And so kind of along that line, what is that conversation like with investors in determining, whether or not the fund is best for them, or maybe both, or one or the other?
Yeah, it's just really what their goals are. If you want to cash flow, new construction's not it for you. It's 18 months, it's 2 years of nothing, and then you got to lease it up, and then it might take you a year to get it leased up and into making money on it. So it's they could be the same investor with 2 different diversification goals, but generally speaking, it's there's higher upside to new construction, but it's a much longer time frame to cash flow.
Awesome. I love that. So is anything changing with the kind of the interest rates and everything? Anything changing in your guys' thesis, strategy, anything like that?
Everything's changing, and it's changing quickly, but interest rates affect us all. We generally speaking, not generally, we always are very, very conservative on our underwriting, but we have a pretty large acquisitions team that is out pounding the ground. Like I said, we looked at 1,400 deals to buy 44 last year. I think those numbers are close. So we're trying to buy off market deals, stuff that don't get to the brokers yet. And if we can buy them below market, the interest rates are not as big of a concern as they would be if, we're buying them at top of the market. And so everything that we're looking at right now, we're closing on 3 properties, a 2-property portfolio in Kentucky and a 1 property in North Carolina here in the next 30 to 45 days. And with the interest rates we've got, the business plan works on them. So, and then we've got another large portfolio we're under LOI on in the Southeast, that everything right now is still trending to look good not regardless, but where we're seeing interest rates right now, it still fits our business plan.
Awesome. I love that. You mentioned, last year, 44 acquisitions, roughly 28 or 30 of those were in a portfolio of divided bunch too. Are you um, changing your focus to try to find portfolios, or are you willing to just look at everything? I mean, obviously portfolios are more ideal because you get more, but
Right.
are you shifting your focus towards more portfolios as you guys are growing and able to easily, raise and acquire these?
No, we will look at anything. We've identified 154 MSAs that we are just banging the phone lines to anybody and everybody that will listen to us, whether it's a portfolio or just a one-off mom and pop. We want to look at everything. Not everything's going to fit, so you got to look at a lot of things to find the right fit, and that's what Tyler and his team in acquisitions do all day long, every day, is just evaluate. And that's the great thing about the fund is it allows us a lot of optionality that when you're looking one off, you don't necessarily have. So having the weight of the fund behind you gives you the ability to look at different things in different ways. So it's kind of cool from that perspective.
Awesome. I love that. Yeah, really. The capital is pretty much like already there. So it's, I guess probably makes you a little more nimble and in the underwriting, your cost of capital is less and different things like that.
And as you know, the storage space has gotten a little bit more competitive here over the last year or two. So, and the other, we own 59 properties now, and we're getting to a size that, banks know who we are and institutions know who we are, and they want to do business with us. And, that's been a big change in the last few years, is our size and our reputation has really allowed us to form relationships that, we probably didn't have a few years ago.
Awesome. I love that. Yeah, that's makes perfect sense, right? You guys have all the pieces in place. And certainly, at least from my perspective, obviously one of the top players in this space. I picked Ryan's brain back at Best Ever about some deals here. Sounds like interested in the Utah market. So I think actually Ben and I are gonna schedule a call and discuss some things because it's been in my backyard for about 15 years. But anyway, as we kind of wrap up here, what is it that, what does the future kind of hold for you guys as you move forward? You mentioned the structure for a $500 million company, then eventually that will turn to $1 billion. Is there plans past that? What does that look like?
Yeah, I don't know what that looks like, but what we are building at Spartan, what Scott and Ryan and Ben's vision is a company that can support whatever comes next. And it's storage right now, and I think we're pretty good at storage, and it's not going to change anytime soon. But we're building an infrastructure from a construction company to a property management company, building out the marketing aspect and the accounting aspect, building out all of the building the infrastructure of a company that can support whatever is next. What that is, I don't know, but it's done pretty well where we're at right now, and I imagine it will do pretty well moving forward into whatever that is.
Absolutely. How long have you been with Spartan?
Like 91 days.
Oh, wow. Oh, you're brand new.
Yeah,
so you just jumped on a rocket ship that's just like pew.
Yep, absolutely. I think there were 80 employees when I started, and there's like 90 some odd employees now. So
your pants have been on fire for 91 days, basically.
Yeah, if I had hair, it'd be on fire too.
I love it. That's awesome. So did you know anything about self-storage at all before you came into this?
Yeah, it's funny. When I was interviewing with Ryan and Scott for the executive interview, they started talking about storage, and I hadn't really connected the dots of Spartan and storage 100%. 20 years ago, I was the regional sales manager for a metal building company, and we built self-storages. So I've probably built 150 self-storages. never owned or operated, but yeah, I'd been in this space a little bit and understood I had done many pro formas to show how great they were to potential owners.
Oh, good. So that makes sense then. So it was a little bit easier transition than to just come in and have to learn on the fly and grow the team. So that's awesome. Well, we're winding down here, but I've got 5 questions I ask all of my guests. It's the final 5. So first question, best advice you've gotten from a mentor?
Best advice I've gotten for a mentor, observe more and talk less.
Gosh, I love that. It's important. What is it about your career that makes you feel like you're fulfilling your why?
Most of my career has been in construction of some sort, and some pretty cool construction. I've done a lot of stuff can't really talk about for the military and stuff like that. But when you get up and you can drive down the road and you can point and say, I did that anywhere in the world almost, I think that's pretty cool because it's tangible. It's something you're leaving behind.
Awesome. I love that. That's so cool. Favorite non-real estate or investment related book?
Oh, goodness. Not real estate. So I just, and part of one of the, it's my new favorite book is the Netflix story, No Rules Rules. It's kind of how you create, and it's actually Spartan has a lot of these principles, but we don't have rules. We've just got principles. And if you live those principles, you can't really be wrong.
Wow. I love that. That's powerful. If you could have any superpower, what would it be?
Oh, I think you got to fly, don't you? I mean,
Yes.
just sake of time.
Absolutely. 1000%. Awesome. Last one. What's the best way for people to get a hold of you and learn more?
You can email me directly at ed@spartan-investors.com. Go to our website, spartan-investors.com, or I guess that would be the 2 ways.
Awesome. I love it. Ed, thank you so much for all of your insight and perspective. You guys are really doing great work over there. I know I've said that 1,000 times to all of you, but it's really inspirational. So thank you so much for your time.
Oh, thank you. I appreciate it. It was great being on with you.
Absolutely. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.